Prairiesky royalty took on a bunch of debt to buy some assets a while ago, the so-called heritage acquisition from the Ontario Teachers' Pension Plan. There are hopes that it may be able to wipe out the debt it took on pretty soon, maybe sometime in 2025. We're joined by Andrew Phillips, President and CEO of Prairiesky Royalty. Andrew, it's great to talk to you once again. You just announced your quarterly numbers. What was the one or two salient points? What was the most important thing to remember about the quarter?
Yeah, I think we showed another quarter of consecutive oil growth, which has all been organic. We haven't made any acquisitions the last 2 years, and a lot of heavy oil growth, which is a big positive. And there was also a number of new discoveries on our lands, which should result in good growth out into the future.
There was a drop, though, in gas and natural gas liquid volumes. Is that because of low gas prices in Alberta?
For sure, yeah. Gas prices have been very weak this year. We have seen some shut-ins, which we think is great. You might as well save it to a point when pricing returns to more normalized levels. And so we lost some NGLs and some gas volumes, but those will return in due course. And it's fee mineral title, so the nice thing is we own it in perpetuity, so we don't have to worry about when that gas price returns to better levels. Yeah,
you have your patient money in that sense. Tell us about your debt profile. When would you hope to be debt-free, and what are your plans for shareholder returns up to that?
Sure, yeah. So we went into COVID with no debt and close to $1 billion in liquidity. We were fortunate to acquire some really great assets. At that point, we peaked out at about just over $700 million in debt. We're down to about 140 today. That'll be at zero sometime next year, depending on pricing. And at that point, we'll start building cash. I think on the dividend side, from a shareholder return perspective, we should be able to grow the dividend ratably alongside the growth of the pace of the growth of the business. And in addition, build cash for the next downturn whenever that happens on the oil side.
Right. What about stock buybacks? Have you been buying back shares?
Yeah, so in COVID, we're the only North American energy company to do a significant buyback. In the summer of COVID, we bought back $100 million worth of stock at $9.30 per share. So bought it back very well. Since that period of time, we focused on acquisitions kind of in COVID and into 2021. For the time being, we've been paying down the debt. That'll be, again, zeroed out sometime next year, and we'll start to build cash again. And we'll be opportunistic on the buybacks. And certainly as we get into next year, when we get into a net cash position, we can start looking at that buyback again.
Your yield, something like 3.6% right now. Do you have plans to boost the dividend?
Yeah, so the dividend's $239 million annually, or $1 per share per year. Again, our business continues to grow. And so without changing the payout ratio, we should be able to increase the dividend. Our hope is every year for a decade on a ratable basis alongside the growth of the business.
What about what kind of growth do you think investors are looking for you from next year? I mean, when they come to you, do they tell you, hey, Andrew, I'd like you to increase your revenue or your volumes 10%, 20%?
Yeah, and I think it's what the business can sustain. I think most analysts would have us kind of just under 5% growth on the oil side and maybe a slight decline on the gas side, which we think are reasonable estimations. I think mid-single-digit oil growth seems reasonable, just given the massive undeveloped land base we have in Canada and some of the lower cost plays. So we're hoping to continue to achieve that. We have over the last few years grown our business kind of just above the mid-single digits. So that would be a wonderful growth rate for our business. And again, the important thing to think about on that front is that's with no capital expenditures. So again, that's without acquisitions.
And what is the big driver, do you think, of your profits and cash flow in the short term? Is it essentially oil and gas prices?
Yeah, simply it's volumes times price. And again, we have fixed costs in terms of our G&A, and then we pay a lot of cash tax. We generate a lot of cash and don't spend much. We've cumulatively almost done $3 billion of free cash flow after tax, after G&A since our IPO, May 29, 2014. So the two costs are kind of fixed, and it's really just a function of volume times price. So pricing affects it, and volume growth is very important as well.
We'll jump. Andrew, thank you very much. We got to leave you there. Thank you very much for giving us the time.
Appreciate your time. Thanks.
Andrew Phillips, President and CEO at Prairie.